Welcome to a Capital Hungry live price action session. Currently September 23rd, pre-London hours, coming towards 2 a.m. Eastern. Wednesday, if I'm not mistaken. I'm really bad with the days. It is Wednesday. You guys should be able to see the screen where you can see the main feed right now and the gold chart on the 1 minute. I was personally just looking at this scalp that I quickly took, no cap, from just for 45 pips. But we'll get some setups because it's not even London session yet. My bad, I was just a bit distracted. But you know how these things go. We are in the mindset of a scalper. We are looking for potential trade ideas through London session volume, understanding what economic events we have alongside price action and market structure, and using the higher time frame key levels as well. And of course, just shooting the shit, keeping each other company, breaking down any charts or anything you guys want to send, talking about the market structure, the price action, everything else that's going on, and just diving into those details. I'm just gonna go grab some water quick. We still have a couple minutes till pre-London anyways. I'm just gonna let some people get in here. Whoever is gonna join, and then we will start looking for some potential trade ideas to take advantage of. So just for anybody new that comes in, just to give them some reminders, it is Wednesday, September 23rd. We have some German manufacturing PMI data overnight, UK PMI data, as well as some France and Germany, France, Spain GDP, which was not included in here because it's not going to have too much of an impact on things we're looking at. But France market PMI specifically, Germany market PMI, Euro PMI overall, and then UK PMI at 430. So we just have to keep an eye on those things, as we probably will be looking for potential trade ideas on GBPJPY and EURUSD. But as per looking at gold right now, if you guys were in the previous Zoom session where it was just more of a casual Zoom session we did for like 4 hours or so during London, what we were starting to take advantage of was some US dollar strength and that bearish market structure on gold, of course. So we were taking advantage of that US dollar strength in the sense that we called these sells below the key level 1.176 and 1.175 specifically, not the key level, but these medium term zones between the key levels and ranges where we noticed good potential reaction areas to take sells. And we played the ranges down to 1.685 so far. UCAD, we were looking for buys above these 1 minute highs at 1.133, but you can see price was just in a bit of a range on UCAD. But what we want to identify is sellers still have yet to break these previous intraday lows, and we can see the reactions on the 1 minute. So as long as the dollar can turn bullish on an intraday perspective here, sorry, let me delete that. As long as the dollar can turn bullish through actual London session and go to revisit these intraday highs, we have that potential to take advantage of those potential UCAD buys at the retest of our key level, or better risk versus reward for us if we could get another retest at these 1 minute lows, which I doubt, but we'll see. Sound is breaking up. Testing. Is that good? So I'm still looking to play the same market sentiment and same structure from the market update webinars alongside the previous session we did last night of looking for primarily gold sells. GJ is in a bit of this intraday range now, so we will identify some potential buy and sell areas on the 1 minute. EU, I am in a bigger sell bias, especially below the potential key level where we're coming now, and below these 1 minute lows, which is forming a bit of an intraday support. So if we can have some impulsive break and retest below there, even as a scalp, this is a great range of 50 pips we can probably see play out through New York. But of course, we have to keep in mind the Germany PMI and the Euro PMI data at around 3:30 and 4 a.m. in USDCAD, looking for potential buys at a retest of 1.133 key level. Is this pre-London open right now? This hourly candle, man, this looking like a good buy right now. But I would have liked it if we got an entry like a bit lower here. It's only a few pips lower, but it would have made a difference. But we'll keep an eye on that as it's still early. Honestly, not too much to explain, as we are playing the same sentiment. And if you guys have been following along the market update webinars, hopefully you guys have been following along these. Not too much as per any high impacting headlines. Jerome Powell also, with his testimony, didn't have too much of an impact on US dollar strength or weakness. So it just continued following suit with this deeper pullback on the higher time frame and those intraday bulls. All right, so for gold, what I'm looking at is either potential break of this low in retest sells, or for London session, if we come to retest this price sensitivity area again. I would only take scalp buys on gold up these ranges very carefully. If we respected 1883 as a support and start seeing sellers exhaust and close order flow here, so we have the initial reaction and rejection, we get another reaction and rejection showing us signs of exhaustion. Price breaks above this minor bearish market structure, which is just drawn out from this peak sell point on the lower time frames here. And then we come above these 1 minute highs in price sensitivity area at 1890 flat. We could take those scalp buys, 35 pips to watch the reaction there, and then potentially another 30 pips to 1897. Otherwise, everything below that to me is fair game for looking for retest sells or a break of this 1883 sells down as well. So obviously GJ higher time frames are very bearish, but the manufacturing PMI data at 430 may have an impact. Let's just double check if there's any political speakers tonight. 1 second here. Today's September 23rd. Just ECB speakers, Bank of Spain's governor, speech by ECB board member at 5 in the morning. Federal Reserve speakers, of course, during New York. No planned Bank of England speakers or political speakers for the UK overnight. Just have to focus on that PMI data that might have an impact, and then just look for target ranges for potential buys or sells based on the market structure. But as you can see on an intraday perspective, very similar to how we were in a range here, and then we had that impulsive move to the downside. We are now generating liquidity again in this consolidation area. So obviously the safest sells would be at a candle closure below 133.500, and we can start playing that wick range fill and just pretty much following the overall sell targets and sell bias analysis and playing the next range down. But from a scalp perspective, we could take the sells below 133.5, watch the reaction at 0.200, watch the reaction at 133 flat around the wick fill, etc. But this pre-London candle, as we do have the potential for price just to play in this range as buyers and sellers are creating failures to break highs and failures to break lows since about a couple of days ago between our key levels as well, 133.5, 134.2, where the actual candle bodies are closing. Besides this, which was just a minor breakout, but of course the following candle snapped right back below the key level and into that bearish market structure. So if price just validates and fails to break below 133.500, and we have these 1 minute lows, which we will identify fail to break. And this pre-London candle has already generated liquidity to the downside. If this candle can turn bullish after failing to break this area, we could take scalp buys above 133.800 psychological price level. Because you can see the reactions at 133.500 are very strong. That's why the same concept of what I'm telling you guys here. So sometimes, how can I explain this? So the key levels, of course, we understand are identified by the higher time frame candle body conjunction points. The reason behind this is because it has historical value of the actual closing and opening of price over an extended period of time. And then the more price data, the more historical price data at that exact price point, the more significance that price point has, okay? And we have back tested this or seen this play out over and over again across different pairs, commodities, precious metals like gold, whatever it may be. We have seen that these key levels will still have very solid price reactions, even in current day, even in current price action, as we're watching. Like, for example, this gold level on 1883 was probably mapped out from some monthly price data from 10 years ago, possibly, right? Because you guys see how I mapped the levels. And this significant price point on gold from 10 years ago is still seeing reactions today. So I don't know if it's the same banks who've been running algos for the last 20 years at the same price points and are just making ridiculous amount of money or what, but we do see the reactions there. So now what I want to talk about is we do not always get reactions at key levels. Okay, sometimes price can bust right through a key level, play around it, move up and down it, give or take 10, 20 pips, 30 pips, whatever it may be. But when price does react at a key level on the dot, watch that right away, okay? And identify that. So what I'm talking about is we can see that price was having a very strong sell-off, and we saw great reactions as per sellers entering the market at 1897, where you can see an impulsive break below, a pullback, in the resistance and order block being created right below the key level, okay? So if price comes back up here to 1897 again, I would be looking for sells again there just because of the previous reaction we had there. Okay, that's one thing. Now, this is another thing I was just going to talk about, is that if we get this clean break below 1883, which we know is a higher time frame key level, plus an area that sellers failed to break previously on the first initial reaction, right? And you saw this strong reaction of almost like 80 pips from that key level. Now that we are breaking below that key level, and I don't want to jinx it, if we get the candle closures below this key level, most likely if we pull back and fail to break above 1883, this price point will now be used for more seller order flow to enter the market, right? So the key levels, of course, are great guides, but you have to understand and watch the current time reactions. I should have fucking held my cells, man. God damn. This shit. I only took this one more scalp, but I closed it because the scalp here, but I closed it because I was starting this price action session and I wanted to explain stuff. But that would have been 110 pips. It's all good though. I'm just scalping through the live session anyways. But anyways, yeah. So now if we have this significant potential candle closure and we know this bearish market structure is being respected, and we can see that this area that sellers previously reacted and buyers jumped in, still buyers failed to break structure or above previous price sensitivity areas. So more sellers jump in the market, and now we are significantly breaking this price point. So most likely the hourly candle is going to close below, and if we can get a retest for the following hour or even on the lower time frame and fail to break, that's a good sell entry. Or if we get a deeper retest to the structure, this is a good sell entry area to play down, right? And we would need even more confirms for the buys. But yo, that's too fast. Why you gotta tease us like that? That's like 3 minutes. Gold just 70 pips. All right, yeah, GJ. Okay, so GJ obviously we didn't break above 133.800 and we were waiting for the reactions to see when we come revisit these 1 minute lows and 133.500. We are cleanly breaking below this previous reactions at 133.500, which is a good sign. Japanese yen is also still fairly bullish and dollar just boomed, which we were expecting anyways. So we should still get some good entry points. And then, of course, EU breaking below key level was the initial good sell entry area. And if we break these 1 minute lows, and we still got like a couple hours anyway, so it's only like 10 minutes. It's pre-London. But our bias of that US dollar strength so far is playing out. And we're seeing the impact of it on the lower time frame alongside the key levels and previous areas of price sensitivity. The next higher time frame target on UCAD. One sec here. Sorry, it's hard to reply to a message quick. 1.3400. You'll probably see some reaction at this price sensitivity area, but the next intraday range would be the following key level, 1.3400. So our overall UCAD buy bias, as we identified the break of structure, US dollar strength, picking up bulls. We didn't get a break of these 1 minute lows, so no chance of a deeper pullback. This liquidity being generated is looking like more buyer side liquidity for that impulsive move to the upside. EU looking for a clean break below the lows to take sells down the ranges. Gold, that was just too fast. You know what I mean? That happened as I was talking in 3 minutes. So what can you? I should have just held myself. I sent it in the banter chat. I took one more before this, like right here when I sent when I was just looking at this. Just that bearish market structure. And the new 4-hour retested right here and started showing signs of rejection. Like that entry, 1889. That would have been 130 pips already. But I didn't want to be too distracted while I was explaining stuff on the price action session. That's why on the casual zooms, I'm more focused on my actual own trading. That's why I don't talk as much. I'll just explain what I'm looking for and what I'm looking at, and then we'll just focus. I'll just focus on that. But it's all good. This is nice because we're respecting bearish market structure. Strong sellers, impulsive candles. This hourly candles should close below 1883 or this 30-minute at least. If we can get a retest of 1883 and then continue the way down. I don't use sell stops. I know some people put sell stops at the key levels or buy stops above the highs and stuff. I personally don't use them. You know, we're about to get like a 30. You know, if we get a bullish candle close above here, it's about to do like it's going to do a 50 pip pullback anyways. So always reacting at key levels. But isn't this interesting? Like, just you have this massive sell-off. So this was the initial reaction. Obviously, as we didn't break bearish market structure, the probability of smashing through this level is increasing, which is significant, right? But the initial reaction was great. With all this sellers pressure right now, right? Just instant bearish candles, price melting, falling 80 pips. Is it not interesting that it's reacting right here at the next key level on a dime? Like what the You get what I'm saying? Like sellers just quickly close some order flow right at this price point. It's probably some computer, some algorithm. Yeah, this wick fill, that wick range. This is nice if we get the candle closure. If the candle closes without a top wick, that shows a lot of bearish pressure as well. And then if the following candle on London Open or this next 30 retest 0.500, that was a quick drop right there. Damn. But yeah, isn't that interesting? Like right here, like right at the key level with all the sellers pressure. I'm not saying it's gonna bounce from here. But just the fact that we just saw this bit of exhaustion, that price stalled here for a few minutes right at the key level. It's always interesting. EU's breaking the 1 minute lows as well. It's a good sign. US dollar's probably booming right now. I didn't even see an entry point for UCAD because it was already at like a good entry area. Like when I was showing you guys in the 1 hour, I was like, this already looks like a good entry. Dollar's booming. Good to see. Peaking new intraday highs. Equity's fairly flat. Gold breaking below key level. I don't want to sell here yet anyways. We got time. We just got to show patience and wait for the setup to come to us and not chase any trades. Yeah, I probably will. I'll probably do like a 1 minute spike, like 70 pips, and just go up. Time is it right now? 2:20. So anybody have any questions about anything, about potential trade ideas on a different pair or something? What else do we have going on? Got YouTube. Man, you guys follow GU analysis? Anybody follow like the GU intraday analysis or GCAD? Fucking on point. You guys see this shit? Only this one didn't break below yet, but we're probably gonna get a retest of 27,600 for Dow Jones sales. But anybody follow EA might give us that potential retest sales here. Or unless it breaks above here for buys. GCAD from the sell level, it's like 150 pips up, even though it was messy. GU from the peak sell level, 270 pips. From the safer sell point and even broken retest, you could have caught 65 pips. Look at the retest. Crazy. Love to see it. Love to see it. US dollar strength will support hitting our intraday low targets. All right, so anything below 133.800 and 133.500, obviously we'll watch the price action accordingly. Actual London Open is looking fair game for sales because GJ is still super bearish. Some minor bullish market structure developing. So if we could get a retest of this structure and fail to break lower and US dollar strength continue through actual London session, this would be a good retest point. Yeah, yep. Nothing crazy. It's not even London Open yet. Who's this? All right, if you guys want to send any charts, want me to look at any analysis, you have any questions, just ask in the chat. I'll just be back in about 10 minutes. We're still waiting for London Open anyways. And then we'll examine the France PMI release and Germany PMI release and Euro PMI release to see if that can give us any confirms for potential. If that can give us any confirms for potential EU trades, but we'll watch it. I already caught that one gold trade, so I'm just more sitting back. I'm not as tempted to take another trade. That setup below, this setup below 1897 a couple hours ago was too nice. I should exert more patience and just hold longer because that would have just been 215 pips alone. Let's see if we can get a retest of this structure or 83. Sorry, I didn't read the chat. Hey, how's it going? Hey, everybody. How's it going, David? Batman. Yes, sir. Adonis. Rapinder. Everybody. That's good. That's good. Are you guys in any trades yet yourselves? Some people are in GJ cells. I don't see anything like too clean just yet. Look at fucking gold, eh? GU shorts. That's good. That's good. Bought CAD 1.3326. Oh, GJ shorts. You guys are in profit. All right, I'll just be back in a minute. Waiting for gold to give you a buy long term. What entry prices are you looking around? Yeah, I'm waiting for London Open as well. Yes, 30 is going to close below the key level, it looks like, in the next 4 minutes. I'll just keep it on GJ for now, on the 1 minute. And the newsroom open here. And then now we play the waiting game. I don't feel like playing NBA though. Might watch something on the side after I make some food. EU gold. All right. Well, actually, what do you guys want to keep it on? Gold, GJ, EU, GJ? Okay, let's put some food away. Gold. Probably higher chance of a pullback if we fail to break these 1 minute lows and buyers come back above this point again. Probably get that pullback for us, but still pretty wonky right now, just reacting around the key level, new 30-minute candle. Nothing too significant. GJ, that's pretty bullish close around 133.500 is a new 30. Looks like it might dig a little bit deeper, but let's just watch the reactions here. EU reacting to key level, UCAD might give us that pullback. Back one second. Yeah, GJ pulling back deeper like we expected. Some strong bullish candle closes right at the level. No signs of rejection yet. And not even London session yet, so all good. Price just ranging right now. UCAD looks like it might give us some pullback. We'll see how it reacts around this bullish market structure retest point. Gold are waiting for a deeper pullback as well. Let me clean up this so you guys can see. You can see when sellers had their impulses move down, they peaked this low, right? Just the low is a bit below the key level, around 1875. That's when you initially saw this reaction, which is telling us some sellers are closing off order flow and buyers are jumping in the market. Now you can see that that is where buyers failed to break just from a 1 minute, area of reaction. And then sellers jumped in again, failed to break that low again. So now what I was about to say is if we break this little 1 minute high here, we'll probably get that squeeze up to 1883. But and then we'll watch the reactions there to see if more sellers jump in from the key level or a retest of structure here. And then that's the low target area. If everyone follows measures, we will get a Christmas without a national lockdown. Well, wonderful. GBPAUD. You're looking for a buy from 781 to 788. Was that around 70 pips? 781, 788. Okay, let's go look at GBPAUD quickly. On an intraday perspective, I would be cautious as we're seeing more sellers' impulsive moves and overall bearish market structure. And sellers did peak a new low around 220 pips below the previous low. So sellers did create a new intraday low. We are seeing more impulsive candles, and we're coming up to an order block area here as well, around 1.7875. And this is looking like more corrective upside for sellers to enter the market to have a sell to revisit these lows, and looking like some bearish market structure that is developing. But that range you're looking at, 78100. Sorry, the key levels got erased on. $78100 to 788. This could just play out only if a strong lower time frame support is made around this key level. And I would look for entries at a break. Like this is still a pretty favorable setup of around 50 pips if you want to catch that range. Yes, we are getting initial reactions here, but overall there's still a lot of sellers pressure on GBP. There's still a lot of negative pressure on GBP. And this key level, if we can see sellers fail to break the key level and then price come above this minor bearish market structure around, and also the same point where you can see buyers have rejected 2 or 3 times now, even with the reaction at the key level, buyers still rejected this minor bearish market structure the first time. Sellers jump back in, failed to break key level, which is a good sign, but buyers also failed to break that 1 minute high again, right? So now what we would need is another failure to break 78,100, showing sellers exhaustion, and a break above this 1 minute high price point, which would also be breaking this minor bearish market structure. And you could take that type of risk versus reward with a clean breakout retest, and then you could sacrifice like a 15 pip stop for about a 52 pip gain. But like right now, this minor structure is looking more bearish, and on the intraday time frame on the hourly, it's looking more like what you're saying, like a counter trend. And that upside move is looking like it's more corrective versus these seller impulsive candles. Right? Obviously, you can just zoom out here. The higher time frame trend is very bearish. GBPAUD is a risk currency versus a risk currency, so you have a lot stronger pullbacks and a lot stronger intraday ranges, meaning buyers and sellers struggle to break key higher time frame highs and lows because of the indecision that can be on risk currency on both risk currencies at the same time. And especially with the seller's impulsive move and how we've slowly correctively came up and now are showing some signs of rejection at this order block area. If you would want to take longer term, intraday buys, it would be above 1.788. And if you want to take those 50 pip buys up to 788, we would need that again, that following rejection at our key level, and then buyers above 1.783. And then because this is looking like sell side liquidity with the amount of times we're failing to break the overall higher time frame bear structure and this minor bear structure, and how we're reacting at the key level again. But obviously, if we can see sellers fail to break it in that sequence of events, that would be higher probability of seeing a shift in the structure and taking that 50 pips up. It's a similar concept to here, right? When we're looking at gold, it's just gold looks a little cleaner. But we have the overall gold on the intradays is very bearish as the US dollar is holding strength. And then there's also this minor bearish market structure on the lower time frames you can identify just from the peak sell points where you've had lows created from the pullback. So you have a low created, pullback, low created, etc. Right? So showing that sellers are in control. And then even though we had a very strong reaction at a higher time frame key level, which is a good sign because it shows our key levels are good guides to use for potential sell or buy entry areas, or to observe price action. Even though we had that initial reaction, we are not even coming close to breaking intraday bearish market structure or breaking lower time frame bearish market structure or above previous low points. And the dollar, even though right now the dollar is turning a bit bearish, it's still overall very bullish and was bullish at that time, right? So a similar idea, what we would need for gold buys, like I explained, is if sellers come back into the market from this entry area where we're rejecting bearish market structure in that previous area of price sensitivity, and they enter the market and fail to break this previous low, which is also our higher time frame key level, this failure to break here, if it did happen, would be a would be a higher risk buy entry. Okay, because this is just showing the first signs of exhaustion to me on the lower time frame. This is initial reaction. That's extremely high risk, but initial reactions can obviously play out well as their higher time frame key levels, and you could get those upside moves. This is higher risk, but less higher risk than the first initial reaction, because now you're validating if it did happen that sellers are failing to break our key level and this previous low that was formed, right? And then safer would be getting that failure to break in that sign of exhaustion and price coming above this previous sensitivity area where buyers cannot break, and the bearish market structure. This would be the safer buy option, but would have less reward, but also less risk because there's higher probability now with the amount of times sellers have failed to break these lows and how buyers are breaking these 1 minute highs. They're going to use this price sensitivity area as an area for buy entries, and then you can get that deeper pullback to retest intraday key levels, but you could watch the ranges to catch those squeezes, right? So that's why that secondary scalp I took before the price action session, just because it was, and I should have held it because it would have been 110 plus pips, was just first identifying this market structure, right? Just seeing that sellers are in control, where we're seeing some order blocks formed, previous areas of price reaction, of course, with our key levels. And then this was the new 4-hour candle. And then, of course, it was rejecting the same price sensitivity point around 1890 and this bearish market structure, which was just outlined with a trend line, okay? But it's just bearish market structure, which you can see here, 1889, right? So that was like a 40 to 50 pip trade, just right back down to around 1885, 1884, around here. But obviously it's because I was just following the overall bearish market structure. There was no reason to buy here. It was higher probability of sells as you're just following the overall structure and trend, and you would need a lot more confirms for buys, like I just stated, those sequence of events, where for sells, yeah, price can sometimes whip against you and break the structure, but you already have more confirms playing with the current structure, playing with the sellers that are in control, and you're seeing the corrective buy upside or just some quick consolidations being formed. You're playing with the fact that the US dollar is holding strength in the current market sentiment in the intraday trend, right? Whereas for going against the trend and counter trends, you have to watch and develop the confirms with like what I was showing you guys, right? Does that make sense? And the same thing we're just looking at like on GA here, where it's just reacting at the area, but we don't have enough confirms. Is even though it's a bit messier, it's very similar idea, similar price action, similar concepts you would look for, where you're watching buyers and sellers reaction on the lower time frame, and the same shift in structure and confirms you would need, just like we're looking at gold, what we would need for scalp buys or potential intraday buys. Higher time frame intraday buys would come above 1897, but we could start looking for buys as scalpers above like 1888, really. Even now that we start extending the structure, right? Because now that's all I do. Most of the time that you guys see me, as soon as we started identifying some bearish or bullish market structure, you start extending it. So now, right, what do we have here? If we did want to take scalp buys, previously when we were looking, let's just say all this didn't happen yet, right? We were looking for any signs of exhaustion here. Obviously, we weren't even in a buy bias. I was just explaining for theory purposes of what we would need to take buys. Was we would need that exhaustion at 1883 and sellers failing to break below there, right? Which would be the first signs of exhaustion as we had the initial reaction, then that rejection. Then we would need a break above the bearish market structure and this price sensitivity area, 1888, right? Then we start playing those ranges from 1888. But as sellers have peaked a new low again, and you can extend the structure and use our key level as a guide point, now if we wanted to take scalp buys, we could potentially start looking for entries above 1883, right? Because we would be coming back above the previous low that was formed. We would be coming above our higher time frame key level and breaking the minor bearish market structure. So you don't have to wait for 1888. You can start looking for buy entries for that squeeze up to 1888 from 1883. But again, when you're counter trend trading, don't get lost in the sauce. Don't just get seduced by the market if price is pushing up and like you're at, let's just say price pushes up above, or let's just say right here, price fails to break 1876 again. We get a bit of a consolidation and then price breaks, retests above 1883, and we start taking those buys for London to 1888, right? Great 50 pip range, and it pushes up even higher to 1890. Don't start getting your panties wet because it's still very bearish when you're looking at gold and you're zooming out, right? This is, remember, 1 minute, don't forget to zoom out. This is the overall bearish market structure I have identified, right? And then this is just the minor structure we're looking at for potential scalps. We could honestly, on gold, push up all the way to 1897 and still be very, very bearish, right? We still haven't had a real significant, actually, we broke one range below the previous intraday low, which is a good sign. But do you get what I'm saying? In a scalping perspective, yes, we can start to take advantage of that, as now we're seeing the shift in structure at this price point instead of what we are looking for around here. You don't have to wait for 1888, but obviously we're just watching it accordingly now. And now, very similar thing to what we were looking at here, except we didn't get the clean retest of 1883, but we might. And now that 1883 retest is potentially lining up with that minor bearish market structure as we just extended it, right? We just stretched it out a bit because we're still seeing sellers creating new lows. But what are we seeing that we previously saw? Sellers started to show some initial signs of exhaustion as they peaked a new low below the previous low. And we could see buyers and sellers just for that brief moments here were making that decision. And it looks like buyers do have just enough order flow being generated to give that squeeze up to 1883. But still, what we would need for buys is exactly what I'm saying. And alongside the confirms of watching the dollar. So now let's say during London, the dollar breaks below the support here and goes to revisit 94. That 10-cent difference makes a big difference on these intraday or lower time frame moves. Because let's just say the same time the dollar does that, hypothetically, gold comes down, fails to break, or even to these lows again for London Open, fails to break these lows, comes back up. We have good scalp probabilities to take these buy trades up. If we notice the US dollar strength getting waved off, it starts to break some lows. We notice gold failed to break key level or pretty much these previous low points on the 1 minute. This is looking like more buyer side liquidity for a pullback. And then we can start taking advantage of that pullback. Yes, that pullback might go to 1897. Then we'll see a sell off there in New York, but we're just taking advantage of the scalp ranges or watching the price reactions at previous areas of price sensitivity and playing. Like if we were intraday trading, I would personally be waiting for gold sells patiently for the best entry at around 1897 to retest as we have a nice new low formed and then possibly get that deeper retest for the North American investors. I would be waiting for that for an intraday trade. That would be the nicest probability. But as a scalper, if you see the potential for that pullback to happen to 1897, and you could play those ranges, right? You just have to wait for the confirms, especially counter trend trading. So now we have London Open in 5 minutes. Like this is looking like some minor exhaustion, but of course watch London Open itself, and then you would need those confirms. GJ is messing around the key level in around 133.6. But again, just patience with London Open. EU is just messing around the key level. Lower time frame is looking nice and bearish though. Just from this peak, just from the peak sell point, of course, where you had a low formed, pull back. Didn't mean to move that. Then a new low formed. Similar idea on EU as gold. And people say like, oh, EU runs correlated to gold. It's not that it runs or has any real relation to gold. It's just that it's the secondary is the US dollar in the quote, right? So, and especially with a lot of focus from investors globally has been on the US dollar recently, and especially the US dollar's minor rebound that's been going on. So it's had a bigger impact of, as per inverse correlation, on pairs like gold or pairs like Euro USD. And by gold, I mean XAU USD, obviously not XAU Euro or XAU AUD. No, use some common sense. The same idea. As long as we maintain below this price sensitivity area, even if we peak a bit higher than there and then pop back below, this will be a higher risk sell. If we just reject the market structure, that bearish market structure that was identified, or if we break below these lows, be the safest sell, less reward. Only buys if we fail to break these 1 minute lows, come back above the key level, break above this price sensitivity area, which would also be breaking above that bearish market structure. Then we take that range, corrective range back up. But obviously we don't have those confirmed yet. And we will need the US dollar to break this 30-minute support it's sort of creating and possibly see equities turning more bullish, which is sort of looks like it is. Where's Dow Jones at? Nothing too crazy as per headlines. Let's just watch the open on GJ. Is everything I'm saying about the lower time frame price action, like alongside the market sentiment or what to look for, the structure makes sense? It's nothing new. I just try to explain it in as many different ways as possible, especially like the buyers and seller strength. And then everything else just comes from repetition, right? Repetition, viewing it, executing on it. Okay, so we're just gonna wait for London Open. I don't take trades right at London Open anyways. Like I don't try to catch some impulsive push right at the open because it's really a guessing game. Like you could have price just continue with the trend, or you could have a liquidity grab happen first. I'd rather just wait for some price action, more price action through the actual session open to develop. But wait like the 15, 30 minutes or just wait at least a few minutes. So we're just gonna watch that. What time is it? 2:59. German market PMI is at 330, Euro at 4, UK at 430. So just keep that in mind. And nothing too crazy as per headlines. It looks like a lot of like the gold moves happened a couple of hours before pre-London, which is pretty rare. I know somebody probably took that buy just up to here when I was saying like if the bullish candle closes above here, but it's up to you guys. I did. No, I'm kidding. No, I did. No, just playing. Somebody probably did. I wouldn't be surprised. Yeah, this pre-London candle is closing below 1883 at least, and it did have that wick all the way down to the next range. London just opened right now. Let's see how this looks like it's gonna melt right away. Already created a wick right there. But I don't like all this price sensitivity there. So obviously we're just gonna wait a minute. Oh, let me clean this up. Sorry. Fucking yellow marker. We should get a nice scalp by like 334. UCAD as well. Watch. These candle closures at the same point isn't the best confirms. It'd be nice if we get that retest of structure. Then this hourly candle turns bullish and we hold that structure. So for those same entry points above this price sensitivity area, which this looks like it might be the pullback. But even if we get the pullback right to the structure, then break above this little order block area, which is where those 1 hour candles were closing adjacently. Is that the right word? Adjacently next to each other like that at the same price point? Parallel? It's not parallel. It's adjacent. Correct. Yeah. US dollar. Let's just actually look at the candles on US dollar quick. Ooh, that's looking like a support. did not break the support. That US dollar strength going to support our EU sells, UCAD buys, gold sells, especially if the US dollar breaks the same type of idea, breaks above these candle bodies. But we'll keep an eye on that. It's in this range right now. Gold hourly left a nice wick range area to fill. Pre-London is going to retest our level, then melt down for us, respecting this lower time frame bearish market structure. Nice sellers impulsive candles on the drops, and then fairly corrective upside moves. So, and it's still holding that. Like we haven't really seen, obviously I'm waiting for the actual key level tap. And then if we get some rejections here, the price breaks back below these 1 minute candle bodies. But I'm just saying that we haven't identified too many impulsive bullish candles, especially that are larger than the seller's impulsive candles. So the structure is looking pretty nice. That was pretty close to the retest of the key level as well. GJ back below the key level, looking nice. UCAD, EU, you guys know what to look for. Oh, I gotta make some chili. After this stream. I already made I made 2,500 yesterday USD, so that's maybe 2,800 CAD, and I made today almost 2,000. I made 2,000 today as well. So I'm pretty good for this week. I'm not in no, like, you know what I mean. You guys take the trade ideas I'm calling. I'm not in any like rush. That doesn't mean you guys have to be as patient as me. But I'm just saying, like, because of those reasons, obviously from an emotional standpoint, I'm not in any rush. Who makes chili this late? Why does it matter? Your body knows like what time it is you're eating, you're cooking. I'm trading like half the time I'm trading in the middle of the night because it's it's not like chili's good gains. Just beans, veggies, ground beef. These little minor breaks. This guy, yeah, I make chili. So. EU, just be cautious with EU, of course, as we have those data releases, like pretty much one after another, like 30 minutes apart. There's France at 3:15, then Germany 15 minutes later, then Euro 30 minutes later. And PMI figures are pretty important for central banks. It might not have the biggest impact, but it will be something that needs to get digested by investors. If you guys have any questions, just ask in the chat. $15 in a row eating peanut butter and turkey dog sandwiches. Chili's normal, yeah. See, chili's normal. Damn, Dow Jones has died quick in the 1 minute, well, in the hourly too, but still. Oh shit, GJ fucking Wickfill on the previous hourly candle. That's a good 20 pips. Damn, that's caveman food. Why peanut butter and turkey, dog? Turkey's good gains though. Turkey. I just hate the taste. Like turkey's super dry. Unless I'm not making it right. Just watch. We'll just identify this as we are just seeing some initial reaction at this previous 1 minute low. Not saying we're gonna bounce here, but just something to watch. If there is a support formed here or something that might get a pullback. EU's just going up and down. I was just probably waiting for the data releases. For more confluence, of gold sells, UCAD buys, it would be ideal to get a 30-year hour close above 94.20 on the US dollar. Equity is just starting out the session fairly flat, but nothing too crazy. So anybody in any trades? You guys take any trades? Some people probably still hold it. GJ. Keith, you're in UCAD, right? You guys took gold from up here? Around here? Okay, just be cautious. Leave some runners. That's like 40 pips almost. 34. Remember, these are scalping. This isn't the casual Zoom sesh with Jeev. That and those, I'm looking for more intraday trades and but when we're on this session, we're scalping. We're scalping lower time frame price action, 10, 20, 30, 40, 50 pip targets. After 10, 20 pips, should be leaving runners. We should be playing air horns. We should have already played 10 air horns, had 40 W's in the chat because people already took GJ scalps and gold scalps. Somebody for sure took gold scalps up to the key level. You know, somebody was doing that. You know, as soon as I said gold will give us a retest at 1883, somebody took the buy scalp up there. This is nice. If we get a nice clean break below these 1 minute lows, it was just nice to watch the reaction there. Yeah, below 0.200, it should melt down. Where's that wick? All the way to 0.133. So that'd be another 20 pip squeeze just to fill the wick. And honestly, after the wick fill, it should melt further, in my opinion. Like we might get an initial reaction there. If you're in gold, just secure some positions. We'll just say even if you enter from there, you're still up 35 pips. Oh, you guys sent some W's for me. Thank you. I appreciate that. I appreciate that. See? Told you guys secure some on gold. I'm not saying it's going to drop, but I told you guys secure some. I don't know why I got the best instincts, but I do. Every time I tell you guys secure, it's the best time to secure. Is it not? Come on. You got to give me that. You got to give me props for that. Every time I say secure some profits and let the runners go, it's usually the best peak time to secure. and we can always wait for more. We can always wait for more setups, anyways. From your experience, right? Trust me. Just because I was just looking at this, it's nothing. It's nothing crazy. But these flat candle bodies right here, we just had that previous little 1 minute support form. Then we had the pullback. It was creating a little support right there again. So worst case, your runner took a break even and your other trades took profit of anywhere up to 40 pips if you had a peak entry, or anywhere on the low side of 15 to 20 pips. And now we patiently watch and wait. This global PMI data might have an impact on market sentiment as well. So we just want to keep that in mind. I always got the best instinct. That's ultra instinct. That's Goku ultra instinct right there. To bag those 40, 30, 40 pips. UCAD, obviously, we're just going to identify this because we're reacting at the same previous little 1 minute highs there. Yes, we're still respecting structure, but like I said, dollar looks like it's just stuck in this range. And if the dollar does end up turning bearish and breaking below 94.1, obviously we're going to be looking for potential buy scalps on gold above 1883, but not right now because obviously you don't want to just enter instantly. GJ still reacting at these low points. What time is it right now? France down on 3 minutes. That's the thing about when you're scalping, and especially something as vicious as gold, you have to listen to my tips. Just because it moves so fast, right? It moves like dozens of pips, sometimes hundreds of pips in minutes. So you really want to watch the lower time frame price action accordingly, and be in that scalper's mindset. What is a scalper's mindset? Very small pip ranges. Some people would literally be scalping 5 pips, right? So I obviously I don't even like to scalp unless it's above 20 pips. But for me, 20, 30, 40 pips, and it really depends on the speed of how long you are in the market. For as a scalper, you should only be in the market for anywhere from a couple of minutes to max maybe 30 minutes. And that's depending on price action as well, right? And obviously, in this situation, for the people, that's why I asked if anybody was in gold sales. Because if you took gold sales, and when I was explaining, just when we're seeing the price action reactions at 1878, you could have still closed like 37, 40 pips, and you still, even if it pulled up with this 1 minute candle, another 10 pips, you still could have closed like 20 pips in profit. So it's a good scalp. And then if we see more opportunities, then we'll take those. And I think another opportunity would be if gold does reject 1883, then break these 1 minute lows. Even back to these, if gold breaks this little minor support and goes back to these 1 minute lows, even that's like 35 pips. And then if we see that this bearish market structure does not break and price does break this minor support and we execute on those sells to those lows, the probability of breaking these lows and going to the next range is starting to increase, you know. But right now, it looks like that could have just been. Remember how I was just telling you guys on gold that it couldn't make its lower wick first. Sellers failed to break the previous lows, and like what AJ was repeating in the chat. If you guys can read that, and then we could get potential deeper pullbacks. So it looks like we might be able to get a break and retest buy squeeze above 1883 to 1888. We'll watch here as well, but so got to be very fast and adaptive and reactive when you are in a scalper's mindset, playing with the session volume as well. That's a solid rejection, but obviously we didn't buy yet, but key levels are crazy, man. GJ, you guys are blessed. If anybody's in GJ sells, you guys are fucking happy, obviously. GU, those GU sellers, probably the exact same thing or very similar. Pretty close. Let's hope dollar does break 90. That's a good confirm for gold to continue rejecting our key level, but we'll wait for those confirms for secondary sell entries. UCAD, we're starting to break above that 1 minute high for anybody that's in UCAD. I know Keith was in UCAD from like down here. You're up 20 pips there. EU, okay, so nice. EU failed to break above. France PMI is dog shit. Can you guys see this economic monitor? This just got released 1 minute ago. And it's well below the forecast and well below previous. And it's a surprise of how negative it is. So if Germany and Euro follow suit with its dog shit data and US dollar continues to strength, EU should have a nice melt. It might get price. It might happen during New York, but you get what I'm saying? So far, keep note, France, dog shit data, well below the pole, well below, like if you guys watch the economic data webinar, usually below 50 PMI figures. Doesn't matter if it's a manufacturing PMI or a market PMI. The grading itself from a scale of 50, below 50 is very poor data. So just keep that in mind. GJ obviously would be ideal to secure some positions at 133.200 as we are reacting there. Let's just zoom out quick to look at the intraday time frames. It is looking nice and bearish though for us. This obviously this liquidity, as we determined, was sell side liquidity because it was not breaking structure. We were just having price range. We didn't have any confirms to buy above 133.8. So people took the sells from that point and below 0.500. UCAD, the dollar's teasing us. The dollar is really teasing us. Dollars in this 1 minute range. Secure most positions if you guys are in positions, and let's just wait for better scalps too. Leave runners with risk free. Just let the market do its thing for a bit now. Because it looked like the dollar after this bullish close was going to have a nice impulse move to break out of that 30-minute range we're looking at, and then give more confirms for those gold sells and for EU sells and UCAD buys to extend that. But it still failed to break on the 1 minute and still in that 30-minute range, which is why we're seeing that bit of ranging on gold here. UCAD just having a bit of struggle at the previous 1 minute high. EU reacting at previous 1 minute lows. You can see identified here, of course, and around the key level. But what is key is that all this is generating liquidity for an impulsive move of once we either get a break of the low and following the overall structure and bias, which our overall bias is weak euro intraday and stronger US dollar and bearish structure technically. So if we get that break below these 1 minute lows, you know, this liquidity is being generated for seller order flow, and we can run with that impulsive move. And you know what we would need for the buys, as I explained like 10 times now. Pretty nice reaction at 133.200 so far. Hopefully, GBP, if anybody's holding runners, GBP PMI at 430 is also terrible, just to give some more pressure for sellers pressure on GBP pairs overall. So let's see what happened on GBP AUD. See how GBP AUD, see how buyers and sellers are in this struggle. Like Tim, how we again had the rejection at these lows and buyers jump in the market but fail to break those 1 minute highs exactly on the dot. And then now we're having sellers retest this area again, with most likely being seller side liquidity still. That's why that safe buy option would be above 1.783. Then you validate this as buyer's liquidity and start playing that corrective range up. But it's just interesting to see, like, you're seeing exactly where buyers and sellers are reacting and why. And then this can, once you dissect that, you can start to break down for yourself of what you would need as per a sequence of events or confirms technically and fundamentally to see GBP AUD buys or sells, right? So that's how I always try to break it down in my head and just lay it out like a step-by-step fashion. This is good for GJ sellers. You guys are still chilling. Come on, dollar. Give us that break. We know you're still bullish. This is looking like this, of course, on the US dollar is looking like buyer side liquidity. The thing with consolidations is a lot of people confuse consolidations with like exhaustion or rejection. It's not. Unless this consolidation and order flow being generated broke bullish market structure and broke these lows, you can't validate it as sell side liquidity. You always validate it as the liquidity following the current trend and sentiment. You get what I'm saying? Just like when we were looking at GJ on the intraday perspective during this period, the whole time, even though price was validating the support, people kept trying to buy GJ and say it's a low and that's the floor. No, this is just order flow being generated in an intraday range that is assumed to be, if you're smart like us and capital hungry, seller side liquidity, because the sentiment is still very bearish. As you had all that Brexit negativity, you had the negative Bank of England sentiment follow suit after, you had bearish intraday structure. This is just liquidity being generated for another impulsive move. Because how does liquidity get generated in the market? Either a pullback to get investors in at better sell entry areas, like let's just say we pull back to 137.2 instead and then melt it down, or consolidation phases, right? This would only be buyer side liquidity for a potential deeper pullback if we continue to fail to break the 135.5 key level and those previous intraday lows, as well as came above the 136, which is already a predetermined key level, and where intraday highs are being formed. And isn't it fucking amazing that this order flow and liquidity that was being generated just happened to be nice and neatly tucked between our key levels? Right? You know, some people, they identified this after. They identified like, oh, okay, now GJ's in a range. They had to see where price was reacting first. We already know levels to use as guides, or psychological price levels or key levels, right? So whenever you see consolidation phases, first understand what trend that specific pairs in, what the market structure is looking like, sellers or buyers control versus like looking at the impulsive versus corrective action. Then understand the sentiment. Is there negativity impacting, in this case, GBP, or is there anything positive for it? And then you can validate if it's seller or buyer liquidity, right? Because think about how many people from a technical standpoint we're not seeing this as seller's liquidity, and we're not seeing this as order flow being generated for more sell moves. They were seeing this as what? That the human mind naturally goes to, either calling a top or a bottom. So after such strong sells on GJ, what would you see this technically as? A fucking support and a low to buy. And they get trapped, right? All these buyers who are probably buying at this technical support being formed this low, and as GJ was holding that support for an extended period of time, almost like what, 5 days, it was holding the support technically the exact same price point. They see this as buys, and they continuously get teased of the buys, right? And then you get taken right the fuck out because GBP is bearish. It's fundamentally bearish. The structure is bearish. This was seller side liquidity. Just like on EU, you had the inverse here. You had strong impulsive moves. Overall, at this time, when we were having very strong signs of economic rebound, right? And price, and we were seeing the US dollar at that time was extremely bearish, because that's when the Feds first started printing out so many US dollars and increasing the supply of US dollars in the market. High supply, low demand equals low price, right? So you had extreme weakness in the dollar. You had risk currencies rebounding, right? Your AUDs, your NZD, your GBP, your euro. So then when you have this strong impulsive move and price in this consolidation area, a lot of people are trying to call a top, technical traders are trying to call a top and sell, because people always want to get the most amazing entry and say they called the top, or say they bought it from the very bottom. It's like a stupid greed psychology thing, like some type of like way to show off. It's so stupid, you know what I mean? But this, you, with the same concept I'm telling you, you can't say that this is rejections. Yes, on an intraday period, you can play these ranges of over 120 pips. You can look for rejections, and these rejections where price was playing in this ranges, again, somebody else would have to watch where the where the buyers first reacted and where the sellers reacted. And then they will say 2 days later, oh, Euro USD is in a range. Price was in this range at already predetermined key levels. It was reacting at, right? So buyers here, they reacted and created an intraday high and first signs of exhaustion at an already predetermined higher time frame key level. Okay, then you had a pullback and an intraday low created at an already higher time frame key level. Now you just have price in a consolidation phase. Every time price is going to hit these high points again, or you see these rejection points, sellers are going to be jumping in the markets trying to call a top on EU after this strong extension, right? They're trying to call a top. But what do you have? This is buyer side liquidity, as at that time, Euro was very optimistic. You had a positive ECB. You're getting the lows getting smaller and smaller. And then look, when you finally have an impulsive break of that high, look where you got the retest at that key level. Okay, so now we might see something different here on EU, because we might get the potential for this liquidity on the upside to be seller side liquidity if we have continued US dollar strength and this negativity around Brexit. And as we are seeing the market sentiment shift, we haven't seen any signs of the market sentiment and the optimistic market sentiment shifting really until like the last week or two. Yes, we are starting to notice exhaustion, but EU buyers kept printing intraday highs. We're finally starting to get a break of this structure here, starting to break below previous lows and failing to test previous highs. You get what I'm saying? We're finally on EU potentially starting to get a break of this long-standing bullish market structure. The same time we identified we were getting fundamental fear in the market that was boosting the US dollar from its lows, buy low, sell high. Euro now is at a buy low, sell high point on the euro, while the dollar was at a obviously a buy low point, right? We've been watching the dollar rebound from 92.7 and watching that monthly pullback. Okay. So at the same time, we were noticing the shift in market sentiment across the whole market, from the negativity around coronavirus starting to increase, Brexit, central banks having more mixed stance, and the technical shifting. That's why we were able to quickly identify the shift in structure on GJ and start taking advantage of the sell side structure. That's why we were starting to identify more potential sells for EU and the optimism ending. UCAD, we were starting to identify breaks of structure from its low points. And we were already looking for UCAD buys from like down here, retest, up here. It's because we are always adapting and staying reactive with what is changing in the real world markets and investor behavior, and then applying that to see what technical price points are investors reacting to, alongside market structure and key levels and all these other tools we have too, you know. But yeah, just some quick tidbits. We'll call those tidbits, some quick tips. Okay, let's go back to seeing what was happening with the actual price action. Like I said, who told you guys, hey guys, close out all trades, we'll wait again? It's the instinct. It's the instinct. Gold's still okay for anybody that was in sells. GJ still actually really nice. Oh shit, my bad. It's because Euro no, sorry. It's because it's that quick US dollar rejection. And let's see, Euro here in the lower time frame. Germany's data just came out on the Euro, and that was pretty good. It wasn't that bad. It wasn't as bad as France's data. So this is giving a more mixed sentiment. This was very close to 50 at least, but it was well below the forecast. But this was still well above 50, which is a good sign, and just a bit below the forecast. And you could see sellers rejected at that exact same low point, now using the reaction that we had from that quick impulsive move was right at 1.685 key level. So we're going to patiently wait for confirms to develop anyways. But that's why I gave those tidbits. That's why I told everybody, if you're in UCAD, close it. Keith is smart. He closed everything, went 3 for 3. Took those 25 pips on UCAD. Just because we were seeing strong rejections here. And of course, the dollar on this new 30-minute looks like it might be breaking the 1-minute lows instead of giving us the high breaks. So obviously if the US dollar has a nice candle closure below these bodies, there's higher probability that it's going to do a pullback to retest these highs. And that sell side move, of course, will cause UCAD to drop further and cause EU to push up above structure. But EU, we would only take scalp buys above this order block at 1.71. We would take buys here. And UCAD, I'm not really looking for sells on UCAD unless we come below 1.332 because the dollar didn't have a clean break yet. Oh, actually it is. Now it is. So dollar's losing strength and waving off strength so far. So stay out of UCAD buys, stay out of EU sells, and we might be able to scalp and adapt to this as sellers have as we're starting to develop the confirms of noticing sellers exhaustion, potential more impulsive buyers candles, and then if we get that break and retest above bearish market structure in that order block, we can take that squeeze up with the buyers, right? Remember I was saying what confirms we would need? And something similar now with the gold as well. Very strong, flat little candle body support and just in this general area. We're noticing the US dollar strength is being waved off. So if we can have a clean break and retest above 1883, we can start taking some scalps above there too. Because that's a clean break below this minor support. But we'll watch that. I'm just gonna quickly fill up my water and heat up some more food, trying to get these gains. I didn't realize I've already been talking for an hour and a half. Time goes by quick on these. I don't know why. Maybe for me because I'm talking. Oh yeah, sorry, I didn't get to read the chat. Gold, yep, that's what we're looking for on gold, but it might give us that deeper pullback, of course. 3 out of 3 for Keith. Good job. London session over New York. Strong reaction on the GJPPL. You're personally done. Good job, Keith. You left a runner on GJ. A lot of you guys are out of your trades for your scalps. Sounds like a good webinar topic. Oh, with that stuff I was just talking about. Watching this again. Hey, if it's useful, you can watch this again, right? UCAD, you got 10 pips. GJ, you got 50. What's the pip count? What's the pip count for this? What can we say the pip count was? Can we say, we can say gold. We'll say gold gave 30. Gold 30 pips. GJ will say 20 pips just to be fair. And UCAD will say 10 pips. We'll say that, yeah. That's light. That's me being generous. That's me being modest. That's me being modest. Actually, GJ is 30 because below 0.500 that retest, right? Don't tell me dollar just snapped right back. But that's why we're staying out anyways. A very nice rejection right at the structure on EU. Crazy how all this shit, isn't it crazy how all this shit works hand in hand? Isn't it crazy how like the US dollar investment and money movement is directly impacting currency pairs like EU and UCAD, which are their own individual trading instruments, or impacting the price of gold against the US dollar, like in real time, all moving hand in hand. Like the same time, EU, like UCAD just quickly, not UCAD, the dollar quickly had this reverse. It did come pretty close to retesting these highs though, like what we were just talking about, just happened really fast. But the same time it did that, EU just happened to reject bearish market structure that we had identified, or UCAD just happened to reject bullish market structure. Like that's not interesting. Is that not interesting? The same time, real time right now, billions of dollars being moved through all these trading instruments. But the same time, EU just rejected bearish market structure. UCAD just rejected, and not rejected, at least the same time it's reacting. UCAD did the inverse as reacting here. And obviously when the dollar reacted at its previous like intraday highs here. Gold ran to the range. I don't know if anybody left any gold runners. Most likely, LE, it's 100%. What can I say? I think 80% of the market is probably machines trading, probably computers, probably especially nowadays, maybe more honestly. And a lot of these algos are reading real-time economic data, reading real-time like economic events and news headlines, or already have the inside scoop on it well beforehand. Tons of math and science involved and calculations, and everything in the liquidity itself just moves hand in hand. That's why market sentiment to me is so important to understand. To understand actual investor behavior from the smart money side, right? Yeah, seriously. Now you just got teams of developers. Everybody probably closed their trades, but if you did leave a gold sell runner, it's not price did remain right below 1883. We got this same repeat. Look at this. You can't tell me the markets are random, or you can't probably guess trades, or like this same concept of structure and what we're looking at can be applied to any time frame. And this right here, like taking this same type of trade, which is 50 pips, or taking this same type of trade, which is 60 pips, there's billions of dollars moving through these candles. There's a ton of repetition in the markets, fundamentally and technically. And like, come on, look at these key levels. You're telling me with that seller's impulse on a dime during session volume, we still had to react to the Jevel? We still had to react to 1876.5 on the dot? I wish I knew these levels I found, what was happening behind the scenes. No, dollar's still fairly bearish. This would be good buy confirms now if we come above 1883. That would be solid exhaustion, and then the dollar remains below. If the dollar on the lower time frame remains below these previous lows, and then EU comes above here again, same idea. Gold comes above 1883. Shit, my mouse just died. Let me plug this in. Yeah, go back in action. But yeah, let me go quickly grab a drink and heat up some more food. If you guys have any questions, please ask. Just ask in the chat. Anybody somehow lose money? If you did, just be honest. Share the entry, share the trade you took, what happened, why it happened. People be going crazy on the Asian stream, going crazy on Monty's London stream or the New York stream. Do you guys watch those streams? Anybody actually watch those? I haven't actually seen them. I just guess what they talk about. I don't think as much, but be honest. Like what goes on in the streams? GJ retest of 133.5, possibly for the new 4-hour candle. This 4-hour candle closes in about an hour and 20 minutes. So possibly retest these candle body lows in the new 4-hour, then continue the way down. Otherwise, during New York, if we continue the bearish pressure, look for sells below 0.200 down to the 132.500 range. We'll just let some price action develop. So we caught like 30 pips on gold, 30 pips on GJ, 10, 20 pips on UCAD. in the scalper's mindset, let's just patiently wait now for some more price action confirms to develop. Seeing the market's not giving the cleanest like yeah, Monty's not bad, you know. He has some experience and stuff. But does Monty use the PPLs? Does he have levels like or start to use? I know Wick started to on GJ, 0.500, 0.800. Seed, I showed him levels. If Monty uses those PPLs, I show these guys a lot. I'm gonna chat with all those guys. Oh yeah, but yeah, let me go grab that. Let's just list some price action. Oh yeah, though I have to stop recording in the next like 20 to 30 minutes. Otherwise Zoom will stop recording itself anyways. I still have, wait, what's the date today? Wednesday? I'm still trading tomorrow anyway, so I'll probably send a casual Zoom link tomorrow. No, none of those guys would touch 1 minute. Those guys, all those guys think 1 minute time frame is messy, but they all preach. You know what's fucked up? And obviously, I don't care. It's people's opinions, right? Everybody says 1 minute time frame is messy or it's noise, but they all preach that price action is the best. Correct? Every technical trader preaches that price action is the best, right? All price action is observing real time the reactions and of course action of live price, right? So would you not want to see reactions at levels, rejections at levels, rejections or reactions at certain market structural points that you have identified? Would you not want to identify that the fastest? Like let's just say if price is coming to a support for people and you're only watching the 1 hour, right? And you want to take a higher risk buy at the support, but whatever pair it is, doesn't matter. If you're only watching the 1 hour or you're watching the 30 minute, you're going to be waiting for that 30-minute candle to close above that level or waiting for the hourly candle to close above that level. Okay. So for people who are waiting, like sometimes Raja guys wait for the 15-minute or they wait for the 30-minute or they wait for the hour candle closure, correct? That's 15 1 minute candles or 30 1 minute candles or 60, of course, 1 minute candles. You know how much information I could see about price action in about 40 1 minute candles at a key area well before the candle closes itself? Obviously, sometimes you want intraday candle closures below key levels just to give you more confirms. But 90% of the trades that we take or the scalps we take, the entries are on live intraday candles, right? Because we are observing the action of price as fast as we can possible by looking at the 1 minute chart. Every 60 seconds, a new candle of real-time economic data and information of buyers and sellers order flow is being printed at every single minute, right? Why do you have to wait for these two 15-minute candle closures, or you didn't like the previous 15? Because you know how messy sometimes those 15-minute time frames and shit look? So you sometimes like the 15 minute and the 30 look like more noise to me than like the 1 minute. 1 minute to me always looks like clean. Obviously, you can get messy in ranges, but you just have to zoom out a bit and understand the range that buyers and sellers are playing in, and then identify those as reaction areas. And you can start watching price action at those reaction areas for the most confirms, right? Dollar just playing some games, EU playing just games right now around the level. Euro PMI at 4 a.m. UCAD just starting to play games. GJ just starting to play some games. We banked out. We're just patiently waiting for the next setup. So all these technical traders say price action's the best. Fuck indicators. Price action. Price action. You just need price action. Read candles, right? But then all of them say 1 minute is noisy. 1 minute you can't see anything. When the 1 minute time frame is the fastest time frame to view the action of price, to view reaction or impulsive moves versus corrective moves. Like most of the time when I'm looking for entries for intraday trades or for swing trades, I'll just be watching the 1 minute price action at a key level, and it won't matter about intraday candle closures or the hourly candle closures. The only reason I give the reminders about candle closures during these live price action scalping sessions is because we are trading session volume. So the London open, the pre-London candle, the London open candle, the Asian session close 4 hour candle, it's going to have an impact on our trades. It's something we have to watch and identify during a live volume session, right? Because we're only scalping these 10, 15, 20, 30 pip ranges, and the new 4 hour candle open can do a 20 pip pullback. You guys have seen it happen many times across different pairs. Or the London open candle, if you're in a scalp trade before London open itself, you could be up 25 pips, and then London open just does a liquidity grab, comes right back to your entry. So obviously as a scalper, that's going to impact you, right? So you have to be aware of certain candle closures or session time overlaps or session closes, whatever. You have to be aware of that. I got the data feed for a tick chart, but tick chart on TradingView isn't as clean as like a futures trader who has access to probably more institutional feeds. Let's look at the tick chart on gold. Oh, actually, no, it's not that. Yeah, see, that's what it looks like. But this is you see the structure still. It's just like a ghost chart. It's a sad. Look at these rejections on the second. Actually, yo, we should start back testing this shit. Like, look at these. Look at this. It's like an order block on the 1 second that we didn't even see on the 1 minute. No, you guys just look. This was on the one. This was on the 1 minute. It's just a wick. But on the 1 second, it's an order. It's like a resistance or order block. And then once you break below there, just that 1 second melt. Let me just circle some parts to see what it looked like. Like, look at this flat 1 second support. Let me circle some parts and see what it looked like on the 1 minute to see what information at key levels, of course. Let me circle that resistance from 1897. This, look at the 1 second reaction. This is pretty similar to the 1 minute though. It's looking a lot cleaner, right? Before it was looking super choppy. But this is zoomed out. When you really want to zoom out and look at each candle, look at this shit. It's reacting exactly at these previous lows. This is some nice price action if the 1 second stays above this price area. It's a little order block is creating. break this minor bearish structure on the 1 second. See it? It's reacting on the key level on the dot. That's crazy. On the 1 second time frame. This is every second of look at this. Look at this rejection on the key level on the dot in the 1 second. Yeah, this is some matrix shit. For sure would give you a headache after a while. But if I can backtest anything in my free time about entries on the tick chart, it's even better for us. But look at this. Look, this is we thought 1 minute rejections. Look at 1 second rejections to key level. Even if we started streaming the 1 minute time frame, not many foreign currency traders or streamers look at the 1 minute. This might be some nice buys on the 1 second chart. If we come above, like this is like I see some minor bearish 1 minute structure right here. We retested it, flat candle body support, come above the key level. Watch gold run that. If gold breaks above this 1 minute high key level, I can see it running up 30 pips. But let's just watch the tick chart for a second. Again on dot rejection. Right on the dot, right on the second. Only scary thing is some of these stardust moments, and then price will just be hovering here for a second, then it's randomly down here. But this is also only like a 4 pip move because obviously we're zoomed in on the tick chart. There's a lot of rejections to the downside. If we break above 1876 here, this shit's gonna fly. Not fly, but give us a little pullback. Let me paste that. Yeah, that was a tick chart, so it's so zoomed in that those like this was only like 3-4 pips right there. We're all that we were watching was this 1 minute candle. Yeah, that was an algo activation right there. This, by the way, was 1 second bear structure. So, nah, I sort of want to go back to it. Look at that rejection at the low. Imagine watching like NFP on the second chart. Price probably just like teleport to like $100 up. Like when it does have impact. Yeah, probably just disappears, right? Then reappears like at the top somewhere, wherever price is. New hourly candle in about 6 minutes. GJ still looking fairly bearish. It's just started to range. EU, nothing too significant. UCAD again, nothing too significant. Dollar's literally back above after retesting that previous high around these wicks. I thought it'd go a bit deeper to the candle bodies, but that was a pretty impulsive retest. Equities are starting to show signs of rebounding, but nothing too impactful for us. It's DJ at 27,420. Euro PMI release in 5 minutes as well. And I still keep forgetting to get my food. 1 sec now. 4 a.m. I got 30 minutes left. Oh yeah, good reminder too. Yeah, in 30 minutes, I'll just watch. I don't know if there's anything gonna be too significant we can take. Gold buys here would be nice and juicy. The amount of break with the amount of failures we had to break, but that's not enough confirms really. GJ still continuing its way down. EU Eurozone has had some pretty dog shit data as well, rejecting bearish structure. UCAD possibly still buys above 1.335 again. Damn, dollar snap back quick. Obviously, the dollar is still overall bullish, like from an intraday perspective, and is not remaining below that support. Yeah, I was just sending a quick message. I was just muted for a second. And then I was putting some chicken in the air fryer and heating up some potatoes. Yeah, after I just saw the dollar, gold buys, they're not good. Yeah, third meal. It's morning? Yeah, I guess so. I guess it is morning, 4 a.m. God damn. Yeah, if nothing significant, as per another scalp, develops within like the next 15 minutes, or if we don't get any crazy like confirms, I'm just gonna end the stream and save it and send it over, and then yeah, that's it for the London session, and I'll send a market update webinar later in New York, or later in the day for tomorrow, and then probably like I'll send a casual stream link when I'm watching the charts overnight for my last trading day of the week. And then Fridays I don't trade. But I'll still send a market update, everything of course as well. So let's just see. We'll just keep it on gold for now. If we get anything in the next 10, 15 minutes, we'll take it. If not, that's it. And you guys already of course know my bias across these pairs unless we get a shift in market structure. Then obviously I'm still in the EU sell bias as we didn't get a break of structure, UCAD potential buy bias, gold potential sell bias as overall bear structure, GJ potential sell bias still overall. The casual stream would probably start like maybe around midnight or 1 a.m. That's usually, even though I want to take trades at pre-London hours, I usually myself during my active trading days and start watching around like midnight. That's when I sent the last casual stream, and then I kept it going till like 4 or 5 a.m. It's just those are too long to record, so I don't record those sessions. But whoever wants to pop in and out of those streams while I'm actively staring at the charts, you can do that. Gold breaking these previous lows. If we can get a clean break on this hourly candle, I don't want to take the sell right now, but the next 4 hour, the fresh new 4 hour candle to retest bearish market structure and key level, pretty much similar to what we got here, would be beautiful. Like if we could get a new low formed for this hour, even if it comes all the way to 1870, then the following 4 hour gives the same corrective sort of pullback. We just continue that. Would be beautiful for like pre-New York, New York. I really like to, if you guys haven't noticed, I really like to imagine like what price is gonna do, but in a good way. Like you guys call it like the magic yellow lines or whatever. I like to forecast. Yeah, I like to do that as much as possible and create as many confirms in my head, or create exactly what I would want to see or along those lines. Because then when it happens, you just have the confidence to execute on it. And especially if it's like already following key levels or preset bias and market structure and other confirms, right? Dollar back above that support. That was just a liquidity grab, it looked like, to test previous highs, grab more order flow to break these intraday highs, which hopefully happens through New York and drives gold down lower. Okay, so let's just see what happens like the next 13 minutes. Otherwise, I'll save this and send it over. If anybody has any concerns, just comment. Okay. Oh, gold breaking above. Take care. Take care, Tim. No worries. So GJ still bearish. Gold giving a deeper pullback, breaking the minor bear structure. But still, I think that's just because we're coming towards the Asian session close. But we'll see how the dollar runs pre-New York and stuff. I'll send a market update webinar anyways. EU just ranging, UCAD ranging. Nothing too significant, like as per like another potential scalp to take. If everybody's good, I'm just gonna save this and send it over because it's coming to like 2.5 hours now. If you're in GJ or GBP, just cautious of the PMI in like 8 minutes. And then you can always review and watch this webinar again to take any tidbits or any information needed, take notes, and I'll see you guys on the next live price action session. Yeah, W's in the chat. I'll send a casual session tonight while I'm during my last trading day. I'll send one tonight at like 1 a.m. or midnight. That one won't be recorded. These are recorded just because like I'm constantly talking and giving information about price, structure, sentiment, what to look for, and for potential like scalp trade ideas and as we're playing in that scalper's mindset. So and there's a lot of information in these, not all the time, but there's usually a good amount of information in these recorded live sessions, even though they're pretty long. But the other one, the more relaxed one, the casual Zoom, what should we call it? What should we name it? I don't know. Just the regular Zoom sessions. I'm still looking for the exact same stuff. I'm just not constantly talking about it or providing like exact information because like I'm looking for the trades myself, and I'm just like usually just watching something or playing Xbox or meal prepping or working out in between, waiting for the key levels, waiting for trades to set up. Last time, if you guys were on it, all I did was type out and explain what I'm looking for on each pair for potential trade ideas. And then I took the gold sells that I called on there. I think a couple other people caught those sells as well. Like it played out perfectly. It was shared in banter chat. And then besides that, we just shoot the shit, like just talk about what everybody's up to and stuff like that. But the price action sessions, these ones, they'll be recorded, have more consistent information in it. So you can come in either or. And it's quicker to like for me to share information in the casual one. Like usually I'll send an update, like if I see an important headline or something shift as per market sentiment, I'll send an update in the trade room anyways. But it's easier if you're just in the Zoom, like if you're just watching the same thing I am at that time, and I just quickly unmute myself and say, hey, I see this happening or potentially this, or watch out for this. But yeah, I'll see you guys later. Let me save this and send it over.